Bitwise has a price target. We are out there with a price target of 250,000 by the end of 2028. And I think depending on whether we have options next year, I would take the bet that we're going to get there sooner.
Welcome back to the channel. That was Jeff Park. He is a chartered financial analyst at Bitwise. He's going to be talking about why Bitcoin is so special against other traditional assets, how Bitcoin cannot be manipulated, Bitcoin's price potentially going up in the future, and Bitwise's BTC price prediction. Make sure to stay tuned for all of that information. And as you can see, Jeff is saying right here, MSTR is the only trade in the world that is simultaneously long global carry and short global carry, a valuable thing that represents pure financialization of the hardest asset in the world, capitalizing on both global liquidity and scarcity. 60-40 in one, don't fade saylor. Seems pretty bullish. And before we get into everything else that Jeff has to say, wanted to share this too with you guys from Quant. He's talking about MicroStrategy here. And if you guys are into Bitcoin and you don't own any MicroStrategy, you may want to look into MicroStrategy because it will probably continue to outperform Bitcoin in the future if BTC continues to go up. But you can see right here, some things that haven't came yet for MicroStrategy that could lead it to have higher price gains. You can see we haven't gone through the January 2025 call school, which could lead to higher prices for MicroStrategy. We haven't switched to the FASB accounting yet, rebalanced higher in ACWI. We have not been included in the NASDAQ or the SPX. It has not flipped BlackRock, Ethereum, or JP Morgan in market cap, flipped IBIT in BTC Holdings, hasn't gotten more than 500K BTC, hasn't flipped that $1 trillion market cap yet. So this is everything that Ryan thinks is coming next for MicroStrategy. Do you agree with him? Leave your thoughts in the comment section below. Let's go ahead and get into what Jeff has to say about Bitcoin and MicroStrategy.
The thing that I wanted to add to this is about Bitcoin specifically and why it's so special versus other assets that we know in the traditional system. Most financial assets exhibit a feature called the volatility skew. This essentially means that people demand volatility to the put side being more important and valuable and expensive than the call side because people like insurance, and insurance is inherently more valuable than speculation. And actually, most stocks would demonstrate this. You see stocks that plummet one day because of bad events, but you rarely see stocks go up like crazy without there being specific catalysts. So you live with this risk of the black swan events to the left almost every day, but not so much on the right. Bitcoin's different. Bitcoin, since its inception, has the highest leptokurtic distribution that you could ever imagine on the long tails of the left side and the right side. It melts up just as much as it melts down. And so this creates what is called more akin to a volatility smile, where upside volatility is actually just as expensive, just as valuable as the downside vol. And because of this feature, there's something unusual that happens with Bitcoin, which is that when price goes up, volatility goes up with it. This is a key insight because most assets do not behave like this. When the S&P goes up, volatility actually kind of may come down because the market might anticipate it's overshot and we have to come back in. And so the fixed strikes and the vol surface doesn't really move that dynamically. But in Bitcoin, it does. And so what you have here is a double whammy effect of not only do the dealers have to now buy more than their models would have told you, once you put in the higher implied vol number, the models now tell you you have to buy even more than what your books marked it for yesterday. And that creates an incredibly compounded squeeze to the effect that you have seen in certain stocks in the past, like GameStop and AMC, et cetera. It cannot be manipulated by any form of technocratic manipulation of what the intention of that security may represent. Bitcoin is an asset in some ways that I akin to saying having no gravity. So there is a little bit of the sense that there's a floor because there's minor profitability and a minimum price required for the network security budget to avoid, a 51% attack, et cetera. So there's a floor, but there isn't really a ceiling. And what I mean by this is that Bitcoin is more of a flow asset than it might be a state or stock asset. Another way to explain this might be a simple example of let's say, someone thought a stock was worth something and then shorted it and someone else bought it and then the stock ripped. And so one person made money, one person lost money, and the stock ended up higher, right? In that simple example, someone just lost money, someone just made money, and the stock reset higher. As you've mentioned, eventually the stock gets pushed down because one, someone's going to say, hey, it's overvalued at that price, so I'm going to go short it. Or even differently, as you pointed out, management's going to take advantage of it and they're going to issue shares because it's overvalued, because there's a way that fundamentally people have a valuation framework around an asset. So there is gravity. But for Bitcoin as a flow asset, it just moves from point A to point B. In that path, somebody lost money and somebody made money. But at some point, when a price is discovered for Bitcoin, it just is where the price is that people will transact. Now, this changes, of course, if you assume there's going to be more sellers at that price because some people want to take profits, etc. But taking out that particular behavior and psychology, Bitcoin itself has no gravity. And this is really important because many of these types of short squeezes end because there is an anchor to resetting the world back to its reality. I think the thing that's really exciting about Bitcoin is that the market cap of Bitcoin really may not represent all that much, except for a particular moment in time in which people choose to transact money into a construct for which they hold their wealth. So it is a price in which people transact for that moment. But beyond that, it's hard to really represent fundamentally what Bitcoin's ceiling may be. And as a result, you can imagine a world where the squeezes will lead to a price higher, but it doesn't mean that the price has to then fundamentally come back down. And so actually, folks who are long Bitcoin should be also excited about the chance to bring options, because all we're doing really is accelerating the flow of the price discovery to Bitcoin where people want to transact. We're pulling that time curve forward, which I think is a great thing. I'm seeing signs of ways that people will express their views on how they want to take directional risk in crypto, but now in a much smarter way. So the idea of buying a long dated, way out of the money call option that is maybe 2 delta, 3 delta, it would feel so improbable that it would be in the money, but you make it so far dated that you actually have a chance at hitting that in the ways that maybe there are folks out there who have these big price targets by 2030 plus. People are going to express those views. And the more people express those views, the more convexity is going to exist in the system that's going to accelerate the price discovery to that point because of the dealer hedging activity. And so, Bitwise has a price target. We are out there with a price target of 250,000 by the end of 2028. And I think depending on whether we have options next year, I would take the bet that we're going to get there sooner. I can't tell you exactly if the price difference is going to change as to what the end state of Bitcoin is. But the thing that I feel very sure and convicted is everyone's price target by a certain timeline with options will be pulled in. It's just going to happen faster, where I think volatility will always be begotten from, to the point where with derivatives being such a small part of the crypto markets today, it's going to have a pretty strong compounding effect until we find that natural price. There will probably be a point in the future when we find where most people got invested and have a sense for a cost basis and there's real dollars in it, that there's going to be some natural points of gravity towards different things. But we're just still so early. Most people actually have not invested really in crypto in a meaningful way. So I think anyone who's trying to think about when that time will be, when crypto volatility goes down, we're just so far from that point where we can assess those outcomes. I think Bitcoin is uniquely in a class of its own versus other crypto assets. And I reference mainly back to its origin as a proof of work asset. I think if you think about why the financialization of the current global economy is the way it is, a lot of it has to do with what I call liquidity transformation, right? Where people are trying to think about how to price time by manipulating the liquidity curve across a variety of different instruments. And proof of work represents another way to maybe manipulate time without liquidity, which is energy. right? Energy is the one other thing that actually can bring time in the way that it serves as a battery in ways that is representative of real productivity, some might say. Bitcoin is the only asset that really captures that essence. All the proof of stake tokens are what I would still call in the category of liquidity transformation that looks more like the financial system we have today.